Hello everyone, I'm Bizarreal. My student ID is EMP80771 and I'm going to present accounting for income tax under corporate accounting, and I have chosen CSL Limited. CSL is a global biotechnology leader that develop quality driven innovative medicine and treat patients with life-threatening medication. The report underlines the tax footprint under different tax regimes, where CSL is committed to remaining aligned with its tax governance strategy, guided by consideration to code of responsible business practice with low risk appetite and managing global tax affairs under consolidated financial statement. And we can see here the full year result 2019, and here is the revenue growth rate is 11% and net profit growth rate is 17%. First of all, I want to discuss regarding accounting concept, where we have to study about the accounting profit. Accounting profit articulates the profit or loss before eliminating the income tax expense and reflect the profit or loss statement after considering all the income or tax before taxation. The next is taxable profit. Taxable profit or loss determines the profit or loss for a period which is illustrated concerning the rules prescribed under tax authorities upon which income tax are payable or recoverable. The next is temporal difference. The temporal difference resides between the carrying amount of an asset or liability in the balance sheet and its tax base, which are further categorized as taxable temporal difference and deductible temporal differences. Another taxable temporal difference, the temporal difference in which outcome are showcasing in taxable amount in describing taxable profit or loss of future period when the carrying amount of the assets or liabilities is over recovered or settled. Next, deductible temporary difference, the underlying differences which allocate amounts that are deductible, which getting to know the taxable profit or loss of future period when the carrying amount of the assets or liability is recovered or settled. Next is deferred tax assets. The deferred tax assets are items in the balance sheet which are allowed to deduct taxable income in the future and ascribed to overpayments as opted by deferred tax liabilities. Last one is deferred tax liabilities. Deferred tax liabilities save the amount of income payable in future period concerning taxable temporary differences. Now I'm going to explain about recognition criteria. The Australian Accounting Standard Board determines recognition criteria for deferred taxable liabilities and assets under subsection 15 to 32, where taxable temporary difference are outlined. The measurement of AASB section 46, showing that deferred tax assets and liabilities shall be measured at the tax rate which applies to the assets realized or liability settled based on tax rates and tax laws, are enacted by the taxation authorities at the end of period, while IAS 12 absorbs the discounting of deferred tax assets and liabilities. Regarding the tax expenses, it has been observed from the analysis of CSL consolidated income statement that income tax expense for the year 2019 is recorded as $422.4 million, which is 24% lower than the $552.3 million as reported in the period of 2018. The analysis displayed the current year tax expense $422.5 million, which is 12% less the previous year, and deferred tax expense is also 7.2 million, and reversal of temporary differences. Regarding the company tax rate times accounting income, the global effective tax rate is calculated following Australian Accounting Standard Board as 18%, which differ from the statutory tax rate of 30%. The effect of different rates of tax on overseas income is US 256.1 million, accompanied by research and develop is 25.5 million, over under provision previous year 13.3 million, other deductible expenses is 15 million. Deferred tax assets and liabilities, it has been identified with the analysis of the CSL consolidated balance sheet that net deferred tax are 210 million, and the net deferred tax during the 2019 as compared to 207.6 million. Deferred tax asset recorded as 378.7 million during the 2019, which is lower 13% lower than the preceding year deferred tax assets of 401.3 million. The deferred tax liabilities are outlined as 168.7 million, where the deferred tax liabilities are recorded as 193.7 million. Regarding the current tax assessed or income tax payable, it has been observed that current tax assets are recorded as US 21.4 million during the 2019 as compared to US 6.6 million during the 2018. The income tax expense is recognized as US 422.4 million and reconciled between the tax expense and pre-tax net profit. The income tax payable not the same as income tax expense because the tax expense taxes based on standard business accounting rules. Regarding the income expense or income tax and the cash flow statement, the income statement of CSL Limited reflect the income tax expense US 422.4 million as compared to last year 552.3 million. The income tax paid in the cash flow statement of CSL Limited displayed 527.7 million during 2019, which is 25% higher than income tax expense as recorded in the income statement. Moreover, the income tax paid is higher than the preceding year 2018. Regarding the temporary difference and the permanent difference, the temporary difference occurs because of the difference between the tax base and carrying amount of the assets and liabilities. The permanent differences allocate difference between the tax accounting and financial accounting of revenues and expenses that will not reversible at any future period, with example of revenues that are not taxable, expenses that are not deductible, and the tax credit for some expense that reduce taxes. The CSL Limited has been assessed for permanent differences, and it has been found that the company is less aligned for permanent differences, including penalties and fines, life insurance proceeds, interest on municipal bonds, and special dividend. The treatment of tax is the CSL Behring orders treatment of tax as per IFRS interpretation of 23 for recognition and measurement requirement as outlined in Australian Accounting Standard Board 100 true-bill income tax, where there is uncertainty over income tax treatments. It has been found interesting to understand the tax treatment of CSL Limited while measuring tax expense and investing reason for company tax rate time accounting income, where the effective tax rate is found difference from accounting income. In a conclusion, we can say that the report illuminates the recognized criteria for deferred tax assessed and deferred tax liability and determines the temporary difference and permanent difference. The study further reveals the tax expense, the income tax expense differs with income tax payable and income tax paid and seeks to underline the reason. The report summarizes the tax treatment and documents the development of conceptual interpretation and understanding with the scanning of accounting income. The report finalized that companies consider income tax as a result of assessing the tax expense in its account. Thank you so much.